Hello, everyone. Justin with Deep Dive Stocks here, and today is September 6th. It's a Saturday. And so we're not going to be doing an after hours market dive today, but rather we're going to be looking at an additional tool available on TradingView that incorporates LDPM and LDPS into a pretty fun and insightful package, if that, for lack of a better word. The tool is the Liquidity Scanner, and we can see it on the screen right now. It essentially, what it's doing in a nutshell is just taking all of the liquidity measurements across a set of stocks or symbols that we specialize or that we select, and then displays them to us in this nice tabular form. And there are several benefits to being able to look at liquidity like this, and that's what we're going to look at today. The two main ways that this is a useful view is when you want to monitor maybe the overall market performance and keep tabs on some underlying instruments or other parts of the market that might work towards the current outlook or works against it. And we're going to look at that first, coming right up. But then the second way that we can use a sort of market-wide liquidity scanner is by setting up our own baskets of stocks that we can then track to see if there's any patterns of liquidity that pop up as we're watching the liquidity move between these individual baskets or within the baskets, or we can start monitoring to see if there's liquidity sort of rotation throughout the market. Is there one portion of the market where bids are starting to step in quite more aggressively versus maybe now we've seen a different part of the market, we're starting to see more asks step in. And so the idea is that can we monitor these groups of behaviors as they move through the market? And of course, I'm going to say yes, and that's going to be what I show you today. So if we go ahead and get started. So first, the liquidity scanner. When you want to add it to your chart, you just look for liquidity scanners and it'll probably be in your invite only section. So then you put on the liquidity scanner here, and then what pops up will look similar to this. Personal preference, I typically put the sensitivity on conservative just because, again, since it's a large view, this is usually to construct more like grand, at least in my head, looking down at, general trends and behaviors, I like to set it to conservative. But definitely feel free to play around with the different views that each one of these give us. But in the conservative mode, I guess the reason why I choose the conservative mode is that, I want a scanner in my head, I want it to be a little bit more on the cautious but confident side, so that if it starts showing me bearish prints, I can be pretty confident that those bearish prints are going to last versus maybe if there was the aggressive, the liquidity conditions, these subtle changes might start indicating a more chaotic liquidity scanner. And then maybe that might, if that's not the view you're looking for, if you're not like a deep scalper, or if you're just like me where you don't want to kind of always have to watch the market, bumping up to the conservative kind of achieves that for you. So when we add it to conservative, and then we can go down here to the different symbols and we can add which symbols we want to look at. You can also specify how many, that way it knows how many to draw, so you don't have to always have 10, but you can have up to 10. Once you select which symbols you want, you just add it to you just click as if you were changing the chart symbol as usual. And then here we say I have a tracking quantity of 5, so we're looking at SPY, QQQ, TLT, Bitcoin, and USD JPY. And we're on the 15-minute view, and LDPM and LDPS are the same, but this is mostly just to have a sort of example. In fact, we're going to hide LDPM real quick. Now in this view, this is the first way that the scanner can be helpful. And the idea is that we want to look so we're looking at ES futures on the 15. And suppose we're somewhere in this range, right? And of course, we don't know downside is coming, right? But suppose we start seeing price on the ES15, bearish liquidity starts popping up, and maybe we want to know, how does that compare to the rest of the market? Is this maybe an isolated event within futures, in particular maybe S&P 500 futures, or is this bearish liquidity, since futures do sort of are the nexus of a lot of trades? Are these futures, is this bearish liquidity, is this, unfavorable price action part of a larger activity or scheme that's occurring in the market? And that's, again, what the scanner kind of helps with, because we can see as the bearish liquidity starts popping up on ES, we have this bullish liquidity on SPY, QQQ, TLT, and Bitcoin has swapped over to bearish liquidity. So that's telling us all within this square, during this period, all of these equities, as far as the red, I'm not going to sit here and draw and pretend like I can draw, rather. But during that time period, we can see that there was a market-wide introduction of bearish liquidity. Interestingly, we see that TLT pops out of it first, but we see that Bitcoin and QQQ actually seems to have led, and these are kind of the patterns you get to look for. So QQQ had led the bearish liquidity, it seems. So perhaps there is some bearish weakness within QQQ. It also does seem to be a leader, though, right? Because then we have the return of this bullish liquidity per the scanner right before this giant jump here in the ES futures, and that occurred before this conversion of this bearish liquidity on SPY. And I guess this conversation does probably maybe feel a little disjointed at this point, but the idea is that we're looking for patterns. We have this tool that can tell us where liquidity is and what it is, and if it's changing. And so if we just pile a whole bunch of those on top of each other, we start to get these patterns, and we can start looking for them and seeing if they have any meaning. And the idea is that, if there's systemic bearish liquidity, or if there are these established patterns, then maybe even though we're just looking at it, or maybe just trading an individual future or stock, the market-wide effects might be presenting themselves in that individual symbol or equity. Another thing to look for, so I hope that makes sense. I'm going to keep talking. And if it doesn't, leave a comment below, and I'll make another video. That's simple. But so on top of being able to sort of gauge what is happening both in the local environment, like which symbol you're looking at, and how that might relate to the overall liquidity environment within the market, we can also start looking for those relationships between the symbols that we've selected in the liquidity basket. For instance, notice that if we take that's fine. So we have, notice how there are these ETFs, right? SPY, and I guess TLT is not an ETF, neither is Bitcoin. So, but the idea is that we have these sort of large clusterings, right, of activity in the market, and they tend to behave in very similar ways, right? They are correlated, where if one gets bearish, you can probably expect the other to get bearish. In this case, we kind of notice that maybe QQQ is a little bit of a front runner with the current instability. Maybe it's located within the tech sector. So we have the bearish liquidity popping up and the bullish liquidity popping up first. We even have a little bit of the bearish liquidity popping up first here, and so on and so forth. But we can see that TLT sort of beats to its own drum. It tends to get these bullish liquidities when SPY, QQQ don't. And again, these aren't like definitive observations, but this is the process of using a liquidity scanner, right? We might want to now go investigate what was happening on TLT during this time period that caused the bullish liquidity versus the bearish liquidity that was kind of being noted everywhere else. And so that's a thread we can start pulling. In addition, we can see that whereas SPY, QQQ, and even Bitcoin seem to have these high correlations of liquidity changes, TLT to a lesser extent, we can see that the USD JPY currency is very much so not correlated with any of the above. We can see that the USD JPY really does beat to the sound of its own drums, especially here on the 15-minute view. And so that tells us a little bit about the relationship between these financial instruments, such that the group that are playing in the USD JPY don't seem to be interested, or their behavior isn't well correlated with the market at large. And by market at large here, I do just mean SPY, QQQ, and TOT and Bitcoin for brevity's sake. But I think that the USD JPY view here is just a nice counter to what it looks like. Or I should say it's not a counter to that, but it is a good demonstration of what it looks like when liquidity between two instruments or two sectors of the market aren't correlated. And we're going to be using that later on. But even here, as we zoom out, we can see the TOT had this spurt of bearish liquidity that wasn't felt really anywhere else. You might be able to argue a little bit on USD JPY, but that would be something to investigate, right? That would be a thread to pull. But we can see that and this helps though, because we know, okay, if we say we're trading ES futures, but we start seeing bearish liquidity pop up on QQQ, we start seeing it pop up maybe on like some of the underlying instruments, then likely, if not already, then the bearish liquidity is most likely going to introduce itself in that sort of like influential way onto ES futures in this instance. So I hope this has been helpful in a sense. We're going to keep it moving. So we have another view, and this is using the liquidity scanner in the same way, but here I've increased the number of the number of underlyings to the maximum 10 versus just 5. And this is, instead of on the 15, this is on the daily. And here we can see that the correlation is pretty nice, right? We get a little bit of this bearish liquidity start walking in, and then we get during this downside in the early hours of 2025, we see XOK, XLI, XLF, right? Everything is bearish. And then almost on a dime, everything becomes bullish. And that's the benefit of these liquidity scanners, right? Like we can see when there are sort of these like massive regime changes, and we can compare those liquidity changes with our own constructed basket of stocks. So that would have been a pretty good indicator that, if say we're June, what is the 5th month, May? Yes. So things, maybe we're testing the support. We see that the bullish liquidity is starting to poke through. But if we look at the rest of the market with the liquidity scanner, we can see that things have become less bearish, right? We've gone from this deep red to this lighter red. And even if we wanted to maybe wait this is the daily, so wait a few more days, as soon as we start seeing this bullish liquidity pop in through the rest of the market, that's a very good indicator that things are indeed changing systemically throughout the whole market. And so let's go ahead actually and watch this. And again, this is why I prefer the conservative setting for the liquidity scanner, because I don't really always want to be in the weeds, kind of digging through the granularity of the data. You kind of just, it's nice to have something that's just very much like yes, no, right? And that has its benefits. It's slightly less sensitive at times. It can be less reactive at times, but on the whole, it gives you that nice, you don't have to really look at things. So we can see here we're coming from this relatively bullish area where there's a little bit of TOT bearishness, but nothing else really going on. Maybe XLF, XLI, right? But right before the start of 2025, we see that things start coupling. We start getting bearish liquidity popping up through multiple sectors, and in TOT, it's already quite bearish. It's very deep red. So now, and we know, and then if we look at LDPM, or LDPS, right? So we have bearish liquidity. We just tested support. We had a little bit of a bounce, but now we've tested support again. And so on the individual symbol on the SPX for the daily, things aren't looking too hot. And then if we go and look at the other aspects of the market, we see that things are also starting to not look too hot. So let's go. So we go down, and then now we know for sure, right, that things aren't good. And notice TLT too is opposite, right? So whereas everything else is bearish, TLT starts printing some bullish prints. And I'll let the economists in the crowd sort of like help explain that, but it is a pretty common trend for you. So you can go out with this and look for that pattern yourself as well, actually. Another interesting pattern you'll find if you do play around with this tool, and it's one of the stocks that I always put up, is right here at the bottom, BRKA. You'll note as you look through this that BRK is almost always doing its own thing, and it's usually the right thing to do. So it's usually opposite of what everyone else is doing, and it's usually, as with the benefit of hindsight, it tends to be the right thing to have done, right? And so it's actually always interesting to see like these deeply red areas, and then almost always you'll get this surge of bullish liquidity on Berkshire Hathaway, which I really enjoy, just because it always reminds me of the whole be brave when everyone's being scared, be scared when everyone's being brave, whatever the expression is. And it's cool that you can legitimately see that in the data when you compare the liquidity statuses across the market like this. So we're bearish, right? We get a little bit of, and we can see here, so TLT is, oh no, we said that, right? And then, so actually I want to go bit by bit. So, so we're bearish. And then so now USD JPY starts getting less bearish. Things are now getting a little less bearish. TLT is bullish again. XLRE is now bullish. And so notice now we're reaching this resistance. SPX on the daily is still printing this bearish prints. But we start seeing, the bearish gas pedal is starting to be, there's some relief popping up. Things aren't quite as bearish as they were. We get our first attempt to surpass this LDPM resistance with bullish liquidity on SPX on the daily. And in concurrency, we also see that the real estate ETF XLRE is now printing bullish prints. XLI is printing bullish prints. XLF is printing bullish prints. So these are probably the areas of strength, right? These are the guys printing the first like recovery actions. They're starting to print those bullish prints. And also notice that BRK is still buying. Still buying. Things go a little bearish again. We hit that resistance. We bounce off of it. We get a little bullish, and now QQQ is bullish. And now everything is bullish. And as soon as everything goes bullish, we could just watch the rest. And we have that TLT doing its opposite thing. Oops. Things are bullish. Things are bullish. And then that's where we end the current data. So yeah, I just wanted to show you guys that. That is the sort of the bread and butter way to use the scanner. And the idea is that, so if we look at current conditions, we have bearish prints, right? Little soft bearish prints. We do have kind of honestly a unique, what was a bull trap that's now just kind of bearish. So not the strongest of data prints, truthfully, for the bullish side, but even with that sort of soft print, we can see the market at large right now is pretty bullish. There's a lot of bullish liquidity going through. However, we do know, it should be noted, that BRK has switched. And this is just, again, part of the previous observations that BRK will typically switch when it's time to start buying into a dip. And so that's what we see BRK doing. And also note that BRK typically is, maybe not in this view, but at least personal anecdotal experience says that it does tend to lead. So worth keeping track, right? And then they sell high. They sell into the rises and they buy into the falls. Is kind of BRK. That's kind of the pattern you'll notice with BRK. So that is the first way of using the liquidity scanner. And the idea, again, is we are mainly interested in like a particular symbol, in this case, SPX or futures, and we know what our local conditions are like because of LDPM and LDPS, and we kind of want to check those local conditions against the market at large conditions. And so all we do is we put the liquidity scanner up, we pick out which stocks we want to monitor, and then we let life happen. And that's what you can see here. And again, and I guess as another example, this is helpful. Here's another case where it's helpful where we had this bearish liquidity, these bear traps that occurred in 2023. And we can see that during that period, the market was relatively bullish. There was a few bearish, this is TLT, what's this guy? Bitcoin. But we could see that SPY, QQQ had a little bit of bearish, but what's this guy down here? A lot of these ETFs down here, bullish. So in other words, the bearish liquidity, the bearish downside, even though it's on SPX on the daily, which can infer some pretty substantial moves, we see that the market at large is still holding steady. And so we can expect at least some, there is available equity and available liquidity to move into the S&P 500 should it need it. And that's kind of the mindset that these data give you. Versus when we start looking at over here and we start seeing these bearish prints start popping up. As they keep popping up, we notice that more and more of the market starts turning bearish. There's less cohesion. And then so the expectation is that, money is starting to be withdrawn from the market all over the place. And that is likely going to affect whatever it is that you are looking at. Now, the second way of using the liquidity scanner is my favorite way, and that's this way. So what I've done is these are 1, 2, 3, 4, 5 liquidity scanners put onto a single chart and for the daily view. And notice that we're not really interested in this view in an individual equity, namely because there isn't one on the screen, but rather we construct these liquidity scanners to be our own baskets of stocks. And in this instance, what I did was I went to the stock heat map on TradingView, which again, I highly, highly recommend checking out. It's just such a cool tool. And I just went to each of these sectors: transportation, producer manufacturing, communications, energy, materials, so on and so forth. And then I picked then you pick on one, and then instead of just put it by market cap, and then I picked like the biggest 5 market caps. And then in doing so, we create these little baskets. So we have this energy basket, we have this manufacturing basket, we have this transportation basket, utilities basket, and this retail basket. And with this view, and again, this is also with conservative. And what we can do with this view is now we can really start seeing, is there a rotation of liquidity that occurs throughout the market? So if we look at, this is the daily, we'll go like just before 2025, because there is I think the scaling on the bottom makes it not look like there's a lot, but there's a lot of data here. Because each one of these individual blocks is 1 day, but we're just zoomed really out because it kind of helps with the pattern recognition and you get to see even more data. But again, we could see that there's this sort of, here the bullish liquidity starts and then it, comes in here and it comes in here. I wish that there was a way to make that always on top. Well, there's not. Okay. And then we see that the forefront of bullish liquidity here, and then there's actually pretty good here. What's that? Utilities. But we can see things really start clearing up as we as it kind of like moves down. What's down here? Retail. Sorry, the drawing is like really messing with my concentration here. I don't like, but what can you do? Get rid of them. So, oh, that got rid of the text too. Shame. Oh no, I need that because then I won't know what. So we see these patterns, these bullish liquidities. We see bearish transport leads this bearish surge here, and then we get a little bit more in manufacturing, we get more in energy, and then transportation comes back, and then we get a little bullish liquidity comes back. Retail is interesting because it doesn't seem quite as correlated. It has shorter stints of bearish liquidity than do transportation, manufacturing, utilities, so on and so forth. But the benefit is, from this view, we can see both current conditions. So for instance, we have energy is predominantly bullish. We have some weakness noted in COP, which is an individual symbol within that basket. Manufacturing was bullish, but we see that there is bearish liquidity starting to poke its head. We see transportation, which again, we did kind of just mention how transportation sort of leads. And again, we see as if a repeating pattern, the bearish liquidity on transportation, on the transportation basket has started quite a while ago, probably at the start, just at the start of July, and has already sort of like progressed, right? So now we have these deep red prints in this transport, and we can see that now we have this bearish print coming in manufacturing, and then we have again that one bearish print in energy. And so on the surface and on their own, these data might seem, okay, what do I do with this? But again, remember, if this is a regular trend of how liquidity is moving through the market as seen on the daily, this might be the heads up that there is in fact a rotation occurring in the market. And indeed, we can see that with transportation, kind of, at least in this view, seeming like a somewhat of a forerunner, and that's what we have here. We can see again, utilities is now starting to, the utilities basket is now starting to become bearish. The retail basket seems to be doing its own thing, but Costco is presenting with a little bit of bearish liquidity. But it seems like the retail is actually sort of the last to the retail basket. And that has Amazon, Walmart, Costco, CVS, and still USDJPY for some reason, which seems better correlated with the retail basket than it did with anything else, surprisingly. So that might be something to look into. So with this, we see that with this makeup, with this way of utilizing the liquidity scanner, you are able to create your own basket of stocks. Like for instance, say you think that one equity is being used to short another equity, well then you could create your own liquidity scanner and start seeing if that's the case. Do you start seeing any sort of behavioral patterns between the liquidity of those two underlying symbols, and then are there any spot patterns, and does that match your expectations if your hypothesis is true, or does it not match the expectations if your hypothesis is true? And you kind of get to go and do that, right? And that's the fun part of having liquidity data, is being able to actually kind of see behind the curtain. Now the functional take-home messaging from this view is, as I said, like we've sort of noted that transportation is a little bit of a front runner. And to that effect, we do see bearish liquidity starting to pop up again on the manufacturing and again in utilities and even on energy, even though early. But this is, at least from our small view of the data here, this seems to be the recurring pattern. Transportation gets bearish, everything kind of follows. Transportation gets bearish, everything kind of follows. So, I don't think it's too much of a question of asking, is this what's occurring currently, right? Is this what is currently underway? And, a pattern is a pattern until it's not a pattern, and there's nothing to indicate that it's not a pattern just yet, and so it must be a pattern. And so we are just witnessing the start of a pattern. Pretty cool, huh? But let's say, for instance, maybe the daily isn't your style, right? It's too short term to see these. You're really interested in maybe years out down the road. Like, are there these very large movements of rotations throughout the market that are occurring? Big money in a sense that isn't interested in if something is just going to be bearish for the next 3 months. They're interested if it's going to be bearish for the next 3 years, right? And for that, you really just have to up your viewpoint, right? So if we go over here to the exact same data, but instead we've switched it to the weekly, this is what we get. And so each one of these small squares is a single week's worth of data. And so note on the bottom here, we're looking at data from 2021 all the way until present. So it's quite a lot of data. We can see some of the equities don't have enough of the data, right? But now we can really start seeing, are there trends or behaviors, or are there liquidity regime changes that are going to span the course of maybe 6 months to a year to even longer? And to that I say, you can see the bearish liquidity started popping up so in 2022, it looks like manufacturing went first. Utilities was kind of all over the place. Doesn't seem too correlated. What I would do is go back to the scanner and look for if there's any ETFs I could fill in for the missing data, or maybe pick a different symbol, but it is what we have currently. So we do see manufacturing lead a little bit of leading previously. We see current manufacturing is bearish. I mean, it was, right? But a little bullish now. So we have current predominantly bearish, it looks, on energy, a little predominantly bullish on manufacturing, actually bullish on transport, bullish on utilities, and we have a little predominantly bullish on retail, but a little sprinkling of this bearish liquidity popping up on Costco. And so we can now just monitor to see if that's going to keep going. Like we can notice that the energy, for instance, the bearishness on energy has been going on for quite a while. And it looks like manufacturing and transport, utilities, retail had a little spurt of bearish liquidity, but current conditions on the weekly view look pretty bullish. So what does this tell us? Well, on the daily, where we had a lot of these views were starting to become bearish, this tells us that the outlook is indeed bearish on the time frame that the daily data kind of give us, which is the next month to 2 months to like 3 months. The weekly, though, for now at least, says that there's at least a good amount of bullish liquidity. And so that short-term bearish outlook shouldn't progress too far into the future. And if it does start to look like it's going to progress too far into the, further into the future, we're going to start seeing a lot more liquidity popping up on the weekly view. And we could start noticing as that happens, which sectors are more weak versus maybe more robust than some other sectors. For instance, if we go to 2023, we can see that the manufacturing and energy sectors so the energy sector was quite weak into 2023, or into 2020. The retail sector actually did not do, I mean, obviously 2020 was terrible, right? But on the weekly view, it seems like, so basically on the weekly view, it looks like there was a lot of instability in the market, but it was, and whereas 2020 obviously happened in the big, COVID crash, but we can see that in terms of liquidity in the market, the instability was predominantly located within the utilities, manufacturing, a little bit as we can see on transport, but we don't have some of the data. And the utilities were good, they suffered for a little bit. But retail overall didn't really suffer a really strong bearish introduction until 2022. Versus in 2022, we see the utilities was very bullish. In 2022, the manufacturing was very bearish. It looks like the first few months of 2022 was bullish for transport and then very quickly changed. So we can start identifying which aspects of the overall market in comparison to the different sectors, which ones are stronger and which ones are weaker. And that might give insight into, where to rotate equity. And so, yeah, that is the gist of the liquidity scanners. I hope this has helped. Just as a super quick recap, remember, once you add it, you can select which equities that you want to monitor. You can select if you want aggressive, balanced, conservative, diamond, temperament, and then you can have some fun. You can always, I like this view because, again, just as a reminder that you can add multiple to a chart. If, although caveat, I think you have to have the paid version of TradingView, but honestly, I'm not sponsored, but TradingView is actually a pretty cool program. They did a good job. So I recommend at least checking it out. And you can get you can put one liquidity scanner on the chart in the free version, I think. But so whereas we can look at sort of the current conditions in a specific view, and if we know particular aspects of that view that we want to monitor, or we can use the liquidity scanner as a pretty macro view of the overall conditions to start identifying patterns and early warning signs that there might be a rotation underway within the market that might affect particular sectors at particular times. And just to keep in mind too, this is 5 sectors, but there are quite a bit of sectors that can be put together. So you can really mix match, and then have even baskets of stocks within particular sectors. If you have a sector like this, process industries, where, about a third of the equities are bearish versus the other 2/3 that are bullish. Put a basket together, put these into a liquidity basket, and see, does this mean that, does it look like that the rest, this is a herald to what is going to occur, or do we think that this bullish liquidity is, based off of how liquidity has moved in the sector in the past, does it look like this bullish liquidity is going to, does it have the characteristics that the overall basket is going to, these individual equities will essentially be moved up with the overall bullish activity of the basket? Or does precedents and prior patterns indicate that these are the front runners within this basket? These LIN, ECL, AMCR, and whatever this guy is down here, MOS, are they traditionally front runners? Is that where people take their money out within this basket, or within this what's the word, sector, first, and then the rest sort of follow like little ducklings? Or what is the behavior? What's the pattern? And that is the true benefit of having liquidity in your pocket like this. So I'll leave you with that. I hope you enjoyed. Slightly longer video than normal, but I figured the weekends are a great time to kind of just sit down, relax, and get a better view of the data. And in particular, this time, I thought the liquidity scanner would be pretty cool. I hope you enjoyed it. If not, let me know. If you did enjoy it, let me know. And I will see you next time. All right, guys. Have a good one.